Hi guys, welcome to Avi's Academy. Our previous video focused on GST registration, wherein we provided an overview on the concept of GST registration, and we have discussed about the constituents of 15-digit GST registration number. We call it as GSTIN. So in this video, what we are doing is we are looking into the two schemes of GST registration. So particularly this video focuses on the first scheme, which we call it as either normal scheme or regular scheme. So let's move towards the regular scheme. First of all, the question is whether GST registration is compulsory for all the firms that are doing companies or firms that are doing business in India. The answer to the question is no. GST registration is compulsory for those business houses or firms or units or companies if their aggregate turnover during the previous year exceeds rupees 40 lakhs in general cases. In for some special category states, for example, for 4 states, a floor limit of 10 lakh is applicable. For another set of 6 states, floor limit of 20 lakh is applicable. In general, we can say if any businessman or company or firms turnover, aggregate turnover during the previous year exceeds rupees 40 lakh, then they have to compulsorily register under GST. The next question is, if a business house or firm's turnover, aggregate turnover is more than 40 lakhs in the previous year, do they need to choose only one particular scheme, or do they have an option to go for other schemes as well? Under GST, there are two schemes that are applicable to a business house or a trader or a company in India. We call it as regular scheme and composition scheme. So regular scheme is applicable to those traders whose turnover during the previous year exceeds 1.5 crore. If it exceeds 1.5 crore, they have to compulsorily opt for regular scheme. They don't have a choice. But in case there is another scheme called composition scheme that is applicable to the traders whose turnover is above 40 lakhs but it is less than 1.5 crore. In that case, they can opt for composition scheme. So I said previously, regular scheme is applicable if the trader's turnover during the previous year exceeds 1.5 crore. So that will act as a threshold limit. But under GST, the threshold limit is not the same for all the states, because the business activities in some states in India are more than other states. Where, for example, if you take some hilly states or northeastern states where business houses or firms are quite less, in the sense there are less number of business activities happening in those states. For that purpose, under GST Act, we have different threshold limit. In general cases, the threshold limit is 1.5 crore. That means if the turnover, aggregate turnover is above 1.5 crore, you have to choose regular scheme. You do not have an option. But in case of some special category states, as I said, there are hilly states and northeastern states of India. For them, the threshold limit is 75 lakhs, which means the business or the firms that are having a business unit in those states, for example, we'll take Assam, which is a northeastern state. There, if their aggregate turnover is more than 75 lakh, they have to opt for regular scheme. They do not have a choice of going for composition scheme. Similarly, if there are service providers who are providing services to their customers, for them the threshold limit to choose regular scheme is 50 lakhs. In case any service providers aggregate turnover exceeds 50 lakh, then they have to compulsorily register under regular scheme. You may be curious to know the states that are considered as special category states under GST. I already said these states are generally the northeastern states of India and the hilly states. So let's have look at these states. So first you have a northeastern states, which is Arunachal Pradesh. Then you have the
another northeastern states, which is Nagaland. Then you have the third one, which is a hilly state, which is Sikkim, and fourth one, a northeastern state, which is Tripura. And then you have another northeastern state, Manipura. And then you have another northeastern state, which is Meghalaya. And then you have the last northeastern state, which is Mizoram. And then the second hilly state, which is Uttarakhand or Uttaranchal. So these are the eight states that have got special status under GST. So it includes all the northeastern states except Assam, because Assam's business activities are slightly better than other northeastern states. So these are the eight states that have got special category states. And in these states, if you have a business in these states, if you have GST registration under these states, you can opt for GST registration, that is regular registration or normal registration, if your aggregate turnover exceeds rupees 75 lakh.
Here I am speaking more about the regular scheme. So let's look into some of the highlights of regular scheme. Under regular scheme, there are, as I said, regular scheme is applicable if the turnover exceeds 1.5 crore in the normal cases. Similarly, there are different rates that are applicable to those individuals who have opted for, or the traders who have opted for regular scheme. So the GST rates under regular schemes are broadly classified into two categories. One we call it as general rate, another one we call it as special rate. Under general rate, there are five rates which you are aware of: 0%, 5%, 12%, 18%, and 28%. So these are general rates that are applicable under regular scheme. But there are two special rates that are applicable to two kind of product. One is 3% rate, which are applicable to gold, and another one is 0.25% GST rate, which is applicable to rough and semi-precious stones. Apart from that, under GST, the filing of return procedure under regular scheme, the filing of return procedure is different from regular scheme to composition scheme. Under regular scheme, whoever opts for regular scheme, they have to file monthly returns. So there are two forms they have to fill in and file. One is called as GSTR 1 form, another one is GSTR 3B form. Apart from that, they have to file an annual return as well, and from April 2020 onwards, they have to file another two sets of return, which we call it as GST RIT 1 and GST PMT 08, which is applicable April 2020 onwards. Apart from that, those who opt for regular scheme will get a benefit, which is input tax credit. So input tax credit, as you are already aware of, it is applicable to those traders who have opted for regular scheme.
Thank you guys for watching the video. If you like the video, give a thumbs up and subscribe to the channel by clicking subscribe button. If you want to share the video, you can share the video, because you can learn to share and share to learn. If you want to get continuous notification, click the bell icon there. And if you have any comments, doubts, clarification, please write here. Thank you once again. Thank you all.